Hello and welcome again. We will see now how to calculate the rent room relief, and we'll do some questions as well. Now there are two ways to calculate rent room relief. One is ordinary way and the other one is rent room relief way, or you can call it alternative way. Alright, now in ordinary way it's very simple. We just do is like that one, like we do in property income, even simpler than that. What we do is we take the rent and we deduct expenses. Alright, so first we take the rent and we deducted all the expenses out of that. Now the net amount is our property income, and this will be this will be the amount which will go in our income tax pro forma, as far as if there is nothing else. Alright, so ordinary ways to do: take the rent, then we deduct expenses out of that, and the net amount will go in our income tax pro forma. If you choose rent room relief, then what we do is we cannot deduct any expense out of that. We just take the rent out of, rent amount, whatever the rent is, whatever rent we are getting. So we take the rent and we can deduct rent room relief. We can deduct rent or room relief out of that. Now for our current tax year, rent or room relief is £7,500, and the net amount will be our property income. Alright, so for what we do is we take our total rent which we have received, and we deduct £7,500 out of that, and the net amount will be our property income. In alternative way, in rent and room relief way, we cannot deduct any expenses at all. We just take the rent and we deduct rent and room relief, which is £7,500 for our current tax year 16-17. Alright, it was different in our previous tax year. Now say for example, if the property was owned by you and your spouse, then this figure will be divided by 2. 7,500 will be divided by 2 if it was owned by your spouse as well. Alright, so that is the way to calculate rent room relief. Now we'll see a little question about that. Now another thing, before we move to the question, we always choose lower between these two because we want our income to be lower. Alright, and we must make an election to HMRC telling them that which way you are dealing, which way we are treating the income. Alright, and we must do that within 22 months after the tax year. Alright. Excuse me. Now if you see on your screen now, that is rent room relief. Now there are two ways to calculate it. First one is the ordinary way, and the other one is alternative way. In ordinary way, what we do is we take the rent on accrual basis definitely, and we deduct revenue expenses out of that. In alternative way, which is rent room relief way, we take the rent on the accrual basis again, and we cannot deduct expenses in this section. We have to deduct rent room relief, which is £7,500, which is exemption. Alright. Now if it is property is jointly owned, then it will be divided by 2, which will be 3,750. Alright, now a taxpayer may choose to calculate his taxable liability in ordinary way, ignoring a rent room relief, or he may elect to choose alternative basis, that is rent room relief. It is advisable to choose the one which results in lower taxable income. An election to ignore the exemption or to elect the alternative basis must be made within 22 months after the end of tax year concerned. Now for our current tax year 16-17, election must be made by 31st January 2019. Now in the example it says Alex has rented a furnished room in his main residence at the rent of £20,000 per year. Now his income is, rental income is £20,000 per year for our current tax year 16-17. Alex incurred repair and maintenance cost of £300 in respect of the rented room. Now, what is the taxable excuse me, what is the taxable property income for Alex for the tax year 16-17? Now what happens is here, we'll calculate the property income in both ways. One is ordinary way and other one is rent, room relief, or alternative way. Now just see, I mean, it's very easy question. You can just calculate it in your mind. There is no need to calculate, there is no need to solve this question on the board. Now we'll take the rent, which is £20,000 if we are doing the ordinary way, and we deduct the expense, which is £300 out of that. Alright, so the net amount is going to be how much? 19,700. Excuse me. Now if we choose the alternative way, then although we cannot deduct the expenses, but we can deduct £7,500. So obviously the alternative way is better to choose in this one, but we must tell HMRC within 22 months after the tax year concerned, which is in our case it's 16-17, so we must tell HMRC by 31st January 2019. Alright, the next one is real estate investment trusts. Distributions from real estate investment trusts out of property income are received by the shareholders after 20% tax at source. Now what the real estate investment trusts are, now these are the trusts of which you can buy the shares. So you buy the shares in real estate investment trusts and they can pay you dividends. Now when they pay you dividends, they will tell you that whether they are paying you out of the other income or they are paying you out of the property income. Now in the notes it says that distributions from real estate investment trusts out of the property income are received by the shareholders after 20% tax at source. Now when they pay out of the property income, although they are the dividends, but we'll write them down under the property income. We'll write them down under the non-savings income. Although they are the dividends and they are paid net of 20% tax, but we'll list them down under the non-savings income. All right. Now when we talk about the paid net of 20% tax, what does it mean? It means that whatever the amount is given into your question, we'll have to multiply it by 100 and divide by 80. Now these distributions are treated as property income instead of dividends for the shareholders. Now what did I say? That when a real estate investment trust paid the dividends, they will tell you that whether they are paying you out of the property income or the other income. If they're paying you out of the property income, only then you can write it down under the non-savings income. If they are paying you out of other income, then you will have to write down under the dividends income. Alright? The last one in this chapter, I think, yeah, that is finishing off chapter, furnished holiday letting. Now furnished holiday letting is very, very important. Please make sure you mark it as very, very important, because it has been examined almost in every other sitting, and there is no calculation on furnished holiday letting. Examiner can only ask you to just write down about it. All right. Now first 4 are from A to D. These are the conditions. Alright, these are the conditions for furnished holiday letting. How can we know that this is furnished holiday letting? Now if a property fulfills these conditions, only then we can call it a furnished holiday letting. Alright. Now what are the advantages of this property? Why would we classify it as furnished holiday property? Now the second 4s, after that, the 4 are the benefits from 1, 2, 3, 4. Now these are the benefits, these are the advantages if you want to write it down. Now how can we know that it is a furnished holiday property? Now say for example, if I have a property in central London, I told you in the previous video that if I have a property in central London, that will not be classified as a furnished holiday letting. Now what does the name say? It says holiday letting. Alright, so London, central London especially, is not a holiday spot, is it? So the property, say for example somewhere in Scotland, by the beach, you can say somewhere in Bournemouth or Weymouth, so that would be the property which can be classified as furnished holiday property. So first condition is that it must be on a holiday spot, right? So where people come on a visit for few days, not for ages. Alright, so all of the conditions must be met for a letting to qualify for furnished holiday letting. Now, what are the conditions? The letting must be furnished accommodation made on commercial basis. The first thing is that it must be a letting, it must be a furnished accommodation on a commercial basis. Now, commercial basis means obviously it will be a commercial basis, so you are charging some rent on that. But it must be a furnished accommodation, so everything will be available in the house. So it will be a furnished property. The accommodation must be available for letting to general public for at least 210 days during the tax year. Now what happens is that this property, it is a furnished property, and it is on the holiday spot, but it wasn't available for letting for 210 days, then this condition will not satisfy. So it must be available for letting for 210 days to general public in a year. Then it says accommodation must be let to public for 105 days. Now, what is the difference between this one and the previous one? In the first one, it said that it must be available for letting for 210 days. The second one says it must actually be let for 105 days, which are half of 210. All right. So it must be available for letting for 210 days, but it must actually be let for half of those days, which are 105. And the last one says during the year, accommodation must not be let to the same person for long-term occupation. All right. Now, say for example, long-term occupation in this case means 31 days or more. Now, if a same person is in your properties, he must not live in the property for more than 31 days. Now, say for example, if he does, then the total accumulated long-term occupation must not be more than 155 days. That's what it says in the notes later, that if there are long-term occupation, then it must not total more than 155 days in a year. Now, most of the students does not understand this. Now, what the rules says that a same person cannot live in our property for 31 days. We understand that. All right. Say for example, if Mr. A came to my property, he lived in that property for 31 days, although he can live in that property for 31 days, but not more than 31 days. Now, say for example, if he lived for more than 31 days, in this case, what does it say? 31 days or more. All right, say for example, if he lived for 31 days or more in our property, and then Mr. B came to my property, he lived for 31 days or more as well. Then Mr. C came, then Mr. D came. All right. Now, the total of that, if it is more than 155 days, then it is not fine. So that's what it says later. What does it say? If there are long-term occupations, then it must not total more than 155 days. All right. So these are the conditions which you must remember. Now, what does it say after that? What are the benefits of that? If a letting is classified as furnished holiday letting, then the following reliefs will be available. The first benefit is that losses on furnished holiday letting can be carried forward to set off against profits on furnished holiday lettings in the future years. Right. So if you suffer a loss on the furnished holiday letting, you can carry forward that loss to set off against the future profits of the furnished holiday letting. The second one says that capital allowances will be available instead of the replacement of domestic items relief. Now, please make sure you delete this 10%. There is no 10% here. So capital allowances will be available instead of the replacement of domestic items relief. Then it says income will qualify as relevant earning for pension contribution purposes. Now, if you remember from your previous chapter, which was pensions, when calculating the tax benefit on tax benefit of the pension, now income qualifying for income qualifying for tax relief was higher of relevant earnings and £3,600. You remember? Now, relevant earnings in that case was inclusive of furnished holiday letting. All right. Now, if you want to go back to your previous chapter, you can check that relevant earning for pension purposes included income from furnished holiday letting. I showed you that time as well. Now, this is one of the benefits of furnished holiday letting. Now, income will qualify as relevant earnings for pension contribution purposes, And the last one is capital gains deferral relief will also be available on the furnished holiday letting. You won't understand it for now, but this is also one of the benefits. When we see capital gains tax, then you will understand it better. Now it says that property situated in only UK and European Economic Area may qualify as furnished holiday lettings. Alright, now that is the end of the chapter. I want to go through one question. It is one example. Now this example which I am going through now, you can find it on our website just beneath this video. Right, just beneath this video you will find a link of property income question. You can just download that example and do it in your own time. Alright, I will just share the screen with you of this question as well, but please make sure you do that when you have time and you can read it when you download it. Alright, now let's read this question. Over the last few years Peter has purchased, actually just pause the video and read this question. I assume that you have already read this question as far as you can see on your screen. This question still continues on the next page. I will just show you in a minute. Now this is, it shows that he has 3 properties, and we can write down as number 5, number 17 and number 27 with the numbers. Now he has 3 properties and he was receiving some rent. Alright, now he did some expenses. Now this is the list of expenses which you can see that Peter's expenses during 2016-17 are. Now these are his expenses. Now on the next page, as you can see, it says that it tells you some details about the expenses which he has incurred. Now after that the solution is also given to you. Now if you want to hide the solution and you want to do it yourself, that would be better. Just hide the solution and try to do this question on your own. If you cannot do it, then just look at the then you can look at the answer and then you can resume this lecture. Please pause the lecture here and try to do this question on your own. I hope that you have already solved this question. If you haven't, then you can see the solution of this question. I will quickly go through some of the elements here. As you can see on your screen, which is the solution, that first of all he has accrued income, which is the rent which he was getting. So for 12 months was for one property which was £500 a month, then it was £800 a month for 12 months, and the last one was for 8 months, which was £750. Alright, now although you might be thinking that this rent is not for right amount of months, we will deduct bad debts in a minute. Then let's the deductions, which are the expenses. He had some insurance, then he had some agency fee as well. Now these are impairment losses or irrecoverable debt or rent. Now 3 months worth of rent wasn't paid, so that's why we have deducted this. You can check it in on the previous page. That was of property number 5. Now then we can deduct the repairs. Then it says redecoration. Now redecoration expenses has already been deducted. Now there are some complex rules on redecoration. Examiner won't examine in that much details, so just deduct these redecoration expenses and don't read the notes which are beneath this solution. Don't read the notes because they are very complex. You won't understand it anyway, and no need to understand it in order to pass this exam. Then it says the replacement of domestic items relief. Now the replacement of domestic items relief, I told you in the previous section, we can only deduct when we replace an item, and when we replace an item, and whatever the proceeds of old asset was, we will have to deduct it out of the replaced cost. So that's why for curtains the cost was £130, but the old curtains was sold for £15. That's why he has deducted out of that. Now the washer dryer limited to the cost of washing machine. Now because the old and previous dryer Now, the previous dryer might have been, I can't read the question again, but please make sure you read the question. There was a difference. So one washer or dryer, one was only washer, and the replaced was, the previous one which he had was washer and the dryer. Now the one which he is going to replace is only the washer. Alright, so it is one of these cases. So I told you in the previous lecture, the old item and the new item which he's going to replace must be of the same category. If it is not of the same category, then we will have to take the proportionate cost of it. Alright, so that's why it is limited to washing machine, cost of the washing machine, which is given on top of this page. Alright, then it says dining table and chairs, no relief for initial expenses. As I said, it is only given on the replacement of asset. Excuse me. Now the total property income of him was 17,870. Out of that we'll have to deduct the loss which he has previously, which was 300 pounds, and the taxable property income for this year will be 17,570 pounds. All right, now you can find this example on your just beneath this video on the website. Just download this example and read it carefully. I hope that you will understand everything. It is very, very easy example, and just things which I needed to explain I've already explained. All right, so that's it for this video, and I will see you in the next lecture, and we will start our next chapter, which is I think employment income. All right, that's it, and I will see you in the next video.